James Cook, thank you for joining us. Emerging markets have recently outperformed developed ones. Do you think this trend could continue in 2026?
Thank you. Yes, emerging markets are now outperforming developed markets for the first time in 10 years, and in fact are on a bull run that has seen EM markets rise 55% since October last year. That's the fifth highest bull run since 2000. I think there are reasons to be constructive on emerging markets over the next 12 to 18 months. Firstly, the asset class remains attractively valued relative to developed markets. It is very under-owned despite the outperformance that we have seen. And emerging markets is home to a lot of what the world needs in terms of some of the themes that are exciting investors like AI, structurally important suppliers to the AI industry in Taiwan, in Korea, in China, home to much of the resources that the world needs and the critical infrastructure necessary for the build out in themes like AI. In addition, emerging markets is home to the majority of the world's population, and markets like China, India, Indonesia, Brazil have deep domestic markets that can offset some of the concerns, some of the macroeconomic uncertainty. We have climbed a wall of worry in terms of trade this year, and as we meet today, most emerging markets have started or got some way in trade negotiations with the US. The Fed easing and dollar weakness are further tailwinds for the asset class.
So beyond China, which has always been a key focus when talking about emerging markets, are there other, perhaps less well-known, countries that you find particularly interesting right now?
So Korea and Taiwan are home to some of their critical suppliers to the semiconductor industry. TSMC is perhaps one of the world's best companies, a leading edge foundry in Taiwan. And in Korea, you have two memory majors, SK Hynix and Samsung Electronics. All three are enjoying a very strong period given tight supply and growing demand. Within Korea, there is a particular aspect to be constructive around corporate governance reform. It is a market historically that discounted the poor corporate governance and mistreatment of minority shareholders. June saw an election in Korea, and in July, a landmark moment with a new commercial act bringing a legal duty to the boards of corporate Korea to treat minority shareholders equally with the founding families. This law is critical because now Korean companies must pay duty to minority shareholders equal to founding families. More reforms are being debated. Again, Korea is very under-owned. It's coming off a multi-decade of underperformance, so it still offers compelling valuations and a broadening out beyond semiconductors in some of its key sectors, shipping, nuclear, K-culture, autos. All of these sectors are enjoying an earnings recovery that should see Korea going further. Beyond Korea and Taiwan, Southeast Asia looked particularly interesting. Markets like Thailand and Philippines have also endured near-term challenges, offering opportunities to invest in some really good quality companies at very compelling valuations.
Thank you, James Cooks, for joining us.
Grazie.